Alright, good evening. Welcome to another closing bell for week ending, 24th of January 2014. I'd like to welcome new members as well as some of the past graduates and members who is present in this room with me in Tropicana here coming live. So as you can see, market is still holding up at 1804. I thought this morning is going to break 1800 because we have a sell-off in the Dow Jones yesterday because China, for the first time, the PMI figures contracted to 49 from 50. So what does this 49%, 49.5 mean? Means China is not growing at the 7.5% that people were talking about in the future. So and in doubt, and also there was another news that came out was a lot of the accounting audit, because of the China having this law that sensitive information about public listed company that is listed in US cannot be transferred out from China, because remember, like Baidu, all these are listed over there. So that has some sort of precaution on the Chinese Shanghai stock. We will look at the chart in there. So the market is taking a tumble. But guess what? Malaysia boleh, Malaysia still holding up above 1800 level. This is partly due to, no secrets about it. All the local institutional, the big boys, EPF, are holding this market up. The world can go to down, and yet this thing will be coming back in here. But no doubt, the whole market, its rate, one thing is pointing is the SGX market, which is Singapore side, has sold off the good support that we have. I'm just going to show you quickly here. This is what I mean, the 3120 level in here, that it should not break, when he broke through it here. Here we were expecting the market to recover back at 3120. It broke through. So there's a lot of selling in here. I will show you this chart in here. But no doubt you will probably retest it. But you still have a nice support here at 3060 for the SGX market here. So we might see some sort of long tail here. Look out for that one. Janet Yellen will be sworn in by end of probably Chinese New Year, for that end of January 2014. So we want to see how kind of actions he is taking, because a lot of news coming out are still talking about QE tapering. However, despite QE tapering, we did see gold break back to the 12,060 level here. Okay, KLSCI, what does it tell us in here? Good. I like this. This, if the market closed with what we at this time, we are seeing a test at 1800. Now this is one of the first of the many tests that we will see. So going forward to the right side of the chart, you will see there will be more SOS, more SOS, SO sign. So on my VSA chart that I have, a little small one here, you could see this is what I mean, the test. Okay, yesterday there was a test, today was a test. So you got a lot of pressure here. The red arrow was a sell-off, the breaking of the spine. This was a nice upthrust here. So this was an arrow indicating it. So we have a test in here. So this may look, the market may revert back. Any sign of recovery, that is going to take place after Chinese New Year. But I do see likely this market will probably gradually move sideways with a bias to the downside to end of February. And this is how we look. But on the good side, looking on the weekly chart, for KLCI, let me just show you the weekly chart of KLCI. We are seeing typically 4 bar. Okay, this is the 4 bar. It is down and it is holding up. Normally, the last retracement that we had, even as far back to May, we generally have about maybe 4 or 5 down bar. Okay, this KLCI currently at this stage, we are experiencing 4 bars. So worst case, we have another 2 more bar down. That will take us to mid-February. And mid-February, I'll get you another update on the 2014 market outlook update for that one. So things not that bad. Now remember, what you see here is a 2-bar reversal on the weekly basis. That weakness is coming in here. So we want to see sign of strength. Okay, SOS, sign of strength on the weekly basis. It is not evident yet. If we do see one, it's only just going to be a test. Test is not good enough. Test means it will be tested and tested and tested, meaning market has to congest and move sideways. But however, the 1800 level has to be hold. Now speaking on that, the 1800 level on my posting, I did say that is a minus 4% retracement from 1880, which is the high for year 20, which is up here to what we call a real two-bar reversal and finally broke through here because of the Chinese rally. Sorry, not the Chinese MPI figure that came, PMI figure came out below it. Now that seems to be, what we saw, a breach in the, or a negative 5-day line change pushing through demand. So we might see a possible sell-off on the US Dow Jones here. Will we see a follow-through as Janet Yellen coming in at 1600? That will give us some evidence looking at the wicks, okay? So I will look at the wicks now to tell me where is this next. Now wicks, like it or not, is a barometer measuring the volatility between the fear and greed. Yeah? The fear and greed. When the market is very, very bullish like what we have last week, the numbers is going to be very low, around the so-called 11 or 12. Okay, it worked in reverse to the stock market. It's actually a measurement of put and calls on the US Dow Jones. So it is a volatility index. It's one of the best indicator. Now what it's telling me currently is a 13.7. So it's neither here nor there. We want to look at the extremity of the situation where the numbers are very low around the 12 level or the 10, then you will likely to see a reversal for the Dow Jones when the figures is at 10. Now on the flip side, when the numbers is around 15, then it tells you 16, 17, market is very fearful. Done the, let's look at the CPO now. Now CPO was a nice one in here, broke back the 2600 in here. This was a nice 2-bar reversal. We got a nice 5-day line change. Think to go long actually. Go long at this level. Go long at CPO. Okay. If it does break up the around 2610, I think 2610, probably take profit, you know, around at 2660. Okay, just a short one here. You might see a breakup to the upside in here. Now remember, the next one I will go on is the gold and the ringgit. Ringgit has definitely weakened a lot. I mean, those of my clients who park their money in SGX definitely benefited. As I said, you know, if you go back the last 10 years, measuring the Sing dollar currency against Malaysia, you got a 5% so-called depreciation of ringgit against Sing dollar. It's always good to park some money in Singapore. Countries, okay, this is where I will go through. Next one is the FX. Okay, so here we have the US dollar against ringgit. Oh, sorry. Okay, so that tells you, we are hitting the old QE tapering. Remember the QE tapering, that the time where foreign funds were leaving, that's the time we actually hit 3.3 side. And now we are at this level. So going forward, hey, this doesn't look good. 3.4 akan datang, my friend. So park some money in Singapore. We might hit 3.4, 3.5. So that's why you can see CPO is going higher. Anytime when the ringgit is weakening, makes CPO prices a bit more attractive compared to the closest competitor, which is the soya oil. So that's what palm oil will do well. We should translate to a better plantation. Okay, a weaker ringgit will tend to hurt because Malaysian being a Malaysian export. So I do think there's some support also for the rubber glove industry, a weakened ringgit in here. So wait for the break at 3.35. Of course, those of you who is going for a holiday, 3.4, 3.5, very expensive for holiday. But for the exporter based like rubber glove and all those plantation, this is good. Now a stronger ringgit will tend to hurt the economy of a country. Okay, that's how you see it. Okay, now going back to gold, a nice, what we call a cup and saucer. Okay, we got a nice support here at 12,000 level here. We got a nice breakout at 12,600 levels in here. Like it or not, is this news about QE tapering saying there will be another QE tapering coming in as Janet Yellen is coming in. But guess what? Gold is going higher. Now make no mistake again, physical gold prices are in huge demand. As a matter of fact, Bill told me, who is our gold correspondent, said that in China, physical delivery is $200 more than what you see here. So if you want to take physical delivery of gold, you have to pay 1,400 level in here. In India, it's about another 100 because there is a shortage of gold. Now remember, production gold prices is at 12,000 in here. So at this level, a lot of gold production prices cannot maintain because of the cost at 1,200 level in here. So there's no incentive for them to produce gold. But there is a huge demand for gold. So technically, if the demand is there, how can gold prices stay low? So it's just, that's what a lot of news, if you read through King's News, KWN King's News, just Google that, you'll see this commodity market is all been manipulated by the central banks in their best interest to keep their currency strong. In this case, with the QE tapering, that's why US dollar will do well this year. Okay? A good bet is actually US dollar in here. So some of you who has a US stock, it's also good too. Don't be too negatively on the US dollar against ringgit. We can do more for our Malaysian ringgit in here. That's all going to be see how this interest rate raise that we have. But I was kind of surprised to see the possible interest rate hike on the second quarter, where our ringgit actually get weakened. Normally when there's an interest rate hike, ringgit will strengthen, but it's not the case in here. Something it's more going out in here, but that one I'll leave it to the economists to come up with it. If I do find new information, I will share with you on the premium subscription. Okay, so we have that one. So we talk about the economics, gold. Okay, the foreign funds. Okay, foreign funds, which is the last topic here. Foreign funds, no good. You can see the rate on the right side that tells you it is still trending on the downtrend. Red is the 5-day moving average, a rollover. We are almost at minus 13 billion, or 1.3 billion on the net selling in there. There hasn't really been buying. If you go as far back to October, every day is so red, except for the last 2 days in 31st of December where foreign funds came in. As I said before earlier on my posting, these were mainly due to Thailand being the situation that they have with all this crisis. I think there's a curfew, right? It's been called martial law. So a lot of foreign funds are leaving it. But problem is they do see a recovery. This is only temporary in Thailand. Now remember, Thailand has been beaten down a lot, so they do see a lot of potential for Thailand, and also valuation. They're much cheaper compared to Malaysia. So they will just wait it out, and once this whole Yingluck versus Street Put, which is the opposition. But again, remember in Thailand for the last the last 42 years, they have 40 coups in the last 42 years of Thailand since they gained independence. So it's almost once every year. Average it out, okay? So it's no big deal over there. Okay, now we're going to review the stocks that we have last week. Let's look at last week was 16th of January. Getronics. Now last week Getronics, we have this nice line change in here. Now if history has any so-called predictive power, we have a 18-day line change also in end of October. The market really moved sideways for almost 1.5 months. Now the same might just go for this one in here. This low was a nice spring here at 323, but it did touch at 329, closer to 325. Who knows? The market will really test before it go further. A lot of time it just congests sideways and break. Now remember Usman, we talked about it earlier. It break, then possible good news coming in here. Getronics is actually, I believe it's a manufacturing play on semiconductors, Getronics, which is similar to Vitrox. Vitrox has broke higher in here. Volume is definitely low, so let's hope this is sign of strength or test in the background. Put your stop loss around maybe $3 or 305. That's what I would do. Things don't move that fast here. Okay, Muhiba, the nice 18-day line change here, took out this $3. He didn't take out $2.70. That was the part. And since then, you've been having a 4-day sell-off. What we see here, 240. Stop loss being 220 in here. Let's again come back to see. Remember, just like MK Land early on, we pick it up sometime in 3 months. It actually congests for 3 months. We finally broke higher. So if you're the conservative side, look for those who pay a dividend. Now some of these stocks have not really gone through whether they pay dividend or not. Use the magic scanner. Look at Mohiba. If they pay a dividend, then you might want to consider holding it longer. Okay. For the PWC stock, which is a penny warrant counter, highly speculative in nature, almost gambling, not for your average guy, but average investor, but you can make a lot of money at the same time. Now Getronics last week, which is we have 5 working days or 3 working days, right? Which is here, 20th, 16 was here, right? This is what we thought we saw. It broke down in here, doesn't look that good in here. Let's say I would give it maybe around 45 cents. We do break, time to exit out for Getronics. Not all trade works, okay? G Mutual, that's right. G, what do they do? G Mutual. Insurance? No. Okay. It might move sideways for a while. I did see the volume in here. Okay. Next one is for the Singapore one. Is NSL. That's right. NSL. Which is what company is that? Is NSL. Okay, let me just bring it up. Yeah, 1, 2, 3, 20th. It did break up, move sideways in here. Nothing much to show off again. Okay, so going next week, which is this 24th of January, we have picked this here, right? First one is this called CB Industry. Okay, CB Industry, it's actually they do build a lot of the milling plants for plantation. Pays a nice dividend in here. Did break up to the new high. Hey, nice one today, you see? 2-bar reversal at just today closing. Okay, so that tells you the story is not over for CBI Industry in here. Still in a nice uptrend in here. I like this. Somehow support did coming towards the end. Okay, another stock we have is multi-purpose capital. finally breaking back to the 200 moving average, trying to conquer the old high at 177 in here. Let's see next week how it does. It might come back and test 142. Alright. For the PWC stock, for some reason I like TRC, which is trading around 55 cents. Did try to break 58 cents. Guess what? Fresh seller came in and said, look, trying to break 200 moving average, let's sell first. And today, on low volume, close back at 54 cents. It's not as well manipulated like AT or XLD. You can see XLD, every day got someone support one, right? Because the sellers has been flushed out, the smart money came and supported, and then finally, I'm not even sure where is XDL today. Let's see XDL today, which is one of PW stock. It's not for the so-called weak heart. If you have a weak heart, no courage, and don't touch this kind of share. Just sit along and watch, just like watching fireworks. Okay. Now 30 cent. Wow, 60 cent, 30 cent. It is 50% loss already. All right. Now from 30 cent to go back to 60 cent, I don't think you ever go back up there again. No more unless the Prime Minister or the Premier China come back again. Okay, fat chance. Okay, this one in here. Once in the 10 years. Okay. So if you miss out, if you got in at 60 cent, the peak was somewhere done in mid-December. Okay, pay note of that. So that's all we have for the closing bell for week ending 24th of January. So it's a summary in here just to recap. Hey, market. Okay, there's some voice in here. Just want to recap back where we have. We are seeing some sort of test in here. Again, the test need to be really kind of solid in here. The volume is definitely lower than two previous parts. Another test. Now remember, test is always the best because it forms a support at this level is 1800. However, if you have a failed test, meaning the market will close below, then it becomes pushing through demand. A failed test, breaking of the spine, it becomes mushroom on the top, a sell-off, to retest the 200 moving average at 1780, which is possible, right? And at the time you want to see whether it's a good time to buy. Again, Chinese New Year comes in, we want to see the interaction and the news coming in here. If that falls, next support, which is a 7% down from 1800, will be 17,550 level in here. So I'm doing a lot of projection now to the downside because at this moment trend is still pointing down. If you go back to my IVSA chart that I post on every Friday in here, it is still red. Okay, so far it's been right. So just wait for it to turn green. Okay, if it turn green, but good news, you have one green already on the right side. That tells you the test. More green, much better off. Okay. So that's all I have, folks, ladies and gentlemen. 4:50. It's time for the weekends for me as a Chinese. So a lot of cleaning up to do, a lot of spring cleaning up to do. For those of you who is driving back safely, thinking of taking the week off, so drive back safely. You can still catch us on the closing bell, being on the webinar. For those non-Chinese, I wish you a good rest, a good holiday. And if I don't see, there won't be any Friday closing bell or whatever the case is. If I have time, I'll probably do one on Thursday, but then Thursday is 30th day, makan day lah. If I do it, my family member will probably just take the holiday and come back next week. All right. So with that, have a good rest. Thank you for listening and good evening. Bye bye.